Good morning, everybody. This is Mark Lambert of the Theta Pendulum Trading Group. I'm just going to go over a trade setup that I took this morning. Um, Basically, the last three videos, I brought in vectors into the equation, and today I'm just going to return back to Fibonacci expansion and contraction and show how I use it by gauging Elliott wave patterns. Basically, let's just get right down to it. This is on a Euro spot market. And you can do the exact same analysis also on the Euro futures market. Um, Basically, they move in tandem, but on the forward slash 60s, which are the Euro futures, uh, it dipped slightly below this 50%. And it also went into this territory a little bit also. Basically, we were looking for a bottom as of Sunday night from our last video, or anyways, from the last email postings that we put up anyways, we were looking for some type of bottom to occur. How long it's going to last, I don't know. That's why we just trade the waves as we see them unfolding in front of us. We've determined that this wave right here is the first wave up. It's what's kind of a sloppy five-wave configuration. But also inside there, you can see that there's also a nice clean one. Also, you see 1, 2, 3, 4, and then even inside of this, you can see another four, another five-wave configuration also in there. Then we did a zigzag pullback. So when we look at this, we normally look at this as wave one, wave two. This is a very well-defined area to anchor our Fibonacci projection points. And basically, from there, the market moved up yesterday and then had a long sideways consolidation late in the day and going into yesterday evening. This was pretty much right after the close, I believe, yesterday, where it topped out. I basically closed out my last long there yesterday. Sat out through all of this, and then obviously this morning when I got up and started analyzing the market, see what had happened, I could see that we made another thrust back up. We reached this previous high, and the first thing I wanted to see is why didn't it land perfectly on this 50% mark when it came so close. Basically, as an Elliott wave pattern, you don't want to see wave fours go into wave one territory. And if you can look right across right here to this previous swing high, you can see on my cursor, we basically stopped right on that high, so we didn't overlap into the territory. And from there now, I can see we've got a wave one, a wave two. This is another small zigzag wave, which I projected another Fibonacci projection. As you can see, the market actually used it, stopped at the 81, pulled back, came up, hit the 100, stayed there, breached it a little bit, pulled back, was bound between the 81 and 100, and then came up to the 127.2, stopped, and then obviously we pulled back a little bit. Now we stabbed through. If this is going to follow the typical scenario, I'm looking for this previous high to get reached, and I want to see a nice clean five-wave sequence also in here. I mean, sometimes it doesn't come out quite as clean as we'd like them to, but that's what we'd be looking for right now. And right now also, the resistance of this previous top is also holding this down. So we might have some sideways action that's going to occur before it does finally pop through, which I'm pretty confident it will. But one of the things that Tony and I have stressed so many times to other traders, that when you trade these short-term time frames, I know I've been kind of lax in mentioning this, but we have kind of like a three-wave rule that we've kind of developed just from market observation. We having a three-wave move is a given. It pretty much is always going to happen. That's the only way direction and motion can happen. You can't just have up down. It has to have either up down then up, or down up then down. So to have motion, you need at least three waves. And with three waves, that's a given. We always look at it as this. Could this be an A, B, C correction? Yes. In the bigger picture, maybe yes it is. So at three waves, we're safe to get out. Also, one of the nuances too is that when you're dealing with Elliott waves, since this was a simple short zigzag, by alternation, we would look at a wave four as being something that's going to be a little bit more complex, drawn out, longer in duration, and you know something? You can take a large portion of this trade just in this wave right here, even shorter than this, which is just 3 of 3 inside of 3. So you can see that's where all the money can be made. There's a lot of momentum, there's a lot of energy coming in, and from there, That's what we're looking at. And will we have a fifth wave that comes up? I'm pretty confident we will, but at least I didn't have to sit through this all through last evening. But to see what's going to happen, moving my stop around, getting out here, getting back up in the morning, and now I'm rolling again from here. It makes for a more profitable trade. Right now, as it is, I am probably going to implement up my stops very soon, and we'll see how this all works out. But this is how we look at the wave mechanics. We don't really adhere to any extremely long counts on Elliott wave. We use Elliott wave as a tool just because the patterns are there, and it's a very well-defined system to observe patterns and just trade the waves. And of course, with that, we use Fibonacci expansion, diatonic music theory, market vectors, all sorts of other types of esoteric type of analysis that we add to it. And a lot of times this esoteric analysis ends up being more important than some of the other things that we look at. So, just keeping an open mind and just trade the market as you see it happening, know what you hope is going to happen, and the market's always going to give you hints where it's going to go to, and you're there to see these hints, and you're just going to move on them. And I hope these videos are being beneficial to you, and I wish everybody a great day. Godspeed and good trading for all.